Welcome to Markets Now. I'm Michelle. We're with Brad Kooima with Kooima Kooima Varilek. We're seeing lower trade over in the grains this morning. Livestock futures mostly higher. And Brad, let's start off with this cattle market. Man, a meltdown after that cattle on feed report. We did do some technical damage, but you have some numbers there that really show that this cattle on feed report maybe wasn't quite as bearish as some thought.
Well, thanks for having me on, Michelle. Most of you that know us know that I'm a fundamental nerd on the cattle, and do I totally accept and understand and well even believe the cattle on feed report? No, I don't. But these are the numbers that the cards that are dealt. So this is the hand we're going to play. But to try to get a bit of an understanding, I guess it starts with you could say, why are the placements so big? A segment of the placements, the lighter side of that, the lightweight categories, some of that would be contributed to the fact that it's still very, very dry in parts of Texas, Kansas, and Mexico. And so you had a pretty good influx, particularly in Texas, a big increase in the placements. And I think those are mostly light cattle. And those, when you can postpone that worry a long time, usually that's what the market does too. It doesn't worry about it so much. But to be fair, the weight breakdown, every single weight class, the placements were bigger than a year ago, which puzzled me. So, trying to dig through the minutia, here's part of the reason. It's the largest number of heifers on feed on October 1 since 1996. Okay, the largest number of heifers on feed as of October 1 since 1996. It's also the highest percentage steers versus a heifer ratio, highest percentage of heifers since October 21 report. So we not only have we not seen retention, we've seen a offloading, continue progression of moving these heifers from off of grass into someone else's hands. And, is it economics? And in a lot of ways, I think it is. Maybe there's some areas where they still don't, one robin doesn't make it spring, so it rained once, that we don't necessarily believe it yet that we're going to have enough grass. But I think it's largely economics. And, when I talk to cow-calf people across the north here, they go, well, Brad, I mean, I can't turn down what someone's willing to give me for a yearling heifer. And to a degree, you're seeing that same thing as we start the calf run here with, it doesn't seem like there's any slowdown at all in the number of heifers in the calf run as well.
Yeah. Plus corn prices have pulled back in a lot of areas with new crop corn coming in. So I'm sure that's a factor. But, let's talk a little bit about the fund liquidation that we've seen, that we did do some chart damage. And, where do you think, did we hold where we needed to?
No, I don't think so. I would have much preferred that we'd stayed above 182 on December cattle. We didn't even come close.
No.
I mean, we went through that like a hot knife through butter. So
did the funds liquidate more here, Brad?
If we don't right the ship here quickly, but that is what I expect we're going to do. I do think we're going to catch here. Okay. But if we don't right the ship here, I would suppose, yes, that you'd get more liquidation. And liquidation is a nice word. I think that another word that I could use here is exploitation of the market here by when you allow this kind of volatility, this large of limit moves, $6.75, like we need to do that in a day. Are you kidding? This reminded me of 2015 and 16, where I felt like the market was taking advantage of, maybe is a more polite word, where you got HFT trading, algorithm trading, algos that don't know the difference between a steer and a heifer, but whipping through these support levels. And then open interest doesn't even hardly change. That first big day, 135 volume, and open interest changes 4,500 cars. I would have thought open interest might have gone down 15,000 cars that day. So in, out, in, out, in, out. I do think that contributes largely to the volatility of the market. I would like to see December cattle back above 182. From a long-term standpoint, you asked me about chart damage. I mean, you can pull up the weekly charts. I've got them up here too. From that standpoint, we haven't wrecked that. I mean, we're still in a 1.5 long general uptrending market from a weekly and a monthly standpoint. But the daily charts got ripped and badly, and the feeder cattle too. My oh my.
Yeah, they look pretty ugly. What about cash trade? We had a little bit of light cash here to start the week at lower money, but does this give Packers leverage to pay lower money for everything this week, or do you think we're going to be able to hold?
I think we're going to hold, and that's part of the reason I have it. When I spoiler alert there that I thought the market was going to catch here. We'll see. I thought we'd trade better than this actually, although feeder cat are up almost 200. Up in this part of the woods, which is northwest Iowa, where we are extremely current, beyond memory current, frankly. We're more current than we were in 2014. Bids actually started to firm here yesterday, and with some of the majors starting to play, with bids that were better than where cattle traded at Tuesday. And this morning it feels that way too. I think there's a shot here that we're going to trade cattle at 184 to 5, maybe mostly 185, which would be better than the beginning of the week. And frankly, still a big price for cattle, obviously. With futures trading where they are now, Michelle, the normal basis for December cattle, we ought to be 3 to 5 over cash.
Wow.
And we're at 178.70 here, and with cash is say 184, we're at a $6-7 discount. So there's some room here. Futures have gotten, I think, a little bit overdone, and I think if we poke a little bit stronger cash, like I expect we're going to, that might stabilize futures here too for us.
And the hog market, we've continued to crack out new contract lows in the back months, including yesterday, but are we getting at a point where we're going to be able to catch here? Because the futures discount to cash, man, it's really big.
Huge. A phrase that comes to mind is too low to sell, too weak to buy.
Yeah.
Really oversold. I'm not bullish hogs, as you know, haven't been. But I think down here, like you said, that as oversold as we are and so far discounted to the cash. And, oh, by the way, this is a record difference between these cattle, these hogs. I guess I would like to think you could get some sort of a correction, but I'm afraid that market is struggling with the worry that you're going to end up with less than perfect demand, because it appears, at least, as though China's hog herd is maybe back, maybe not back to where it was, but certainly in a better shape than what it had been. The prices there for hogs are much lower year on year, 40% less. So we got a little bit of a hill to climb here on the hogs, but hopefully we get a little bounce here. This is a tough time of year, though. I mean, everything seems to be stacked against the hog deal, but let's get a bounce, and I would say, sell rallies.
Yeah, seasonal's pointing lower here in October for sure. Funds, though, they're out of most of their longs, aren't they?
Yes, they are almost flat, which maybe we can, maybe that's enough to finally stop the selling, right? Sometimes it's not who's in, but who got out. So.
Yeah. One more question on the meats. You mentioned, the risk aversion or the demand bears kind of piling into the hogs here on the pork side of things. But we were selling off prior to this cattle on feed report on the cattle market just because of that same thing, right? Some risk aversion due to demand concerns with the macros.
100%. I mean, I don't think you'd have got that kind of a move on just a 106 placement number without the geopolitical concern, the fear of recession, the fear of what's going on, in the Middle East and Ukraine and all the rest. And so, yeah. And, you can't get away from it. I mean, every news service is, it's like, let's portray things in its worst light, and I think that kind of, weighs on the mentality of the market. And as you said before, and I've said too, uncertainty is bearish cattle. And that seems to be the deal. Now, as far as, just trying to analyze demand in the here and now, it seems to me like I see no indication that it's slowed up, certainly not domestically. I still get anecdotal feedback that the demand for beef going into the Christmas season is excellent, and beef's bringing more for that time period than it is for right now. So, I don't know. We have to be cautious, but it seems to me like cattle fundamentals have gotten themselves a little underpriced here.
Yeah. And grains were, back under 13 on beans, under 5 on corn. We just can't seem to get much traction there on either.
Sideways. And the beans failed right where you didn't want them to. I mean, right there where that critical resistance was, right? I mean, in fact, it's so obvious. I'm going like, seriously, that's how easy it's going to be this time. I mean, we failed right on retracement, right on moving average stuff, right on the old highs, so it's pretty clear, you got to get on top of 1320. on November beans. And I thought, when we closed about $5 on the front end of the corn, beach corn here, that maybe we'd get her going too. But, to fail right away that next day. I'm not particularly bearish either one of these markets. I just feel like it's caught down here and doesn't have enough gas in the tank to get up out of here. End user type advice, if you're a feeder or something like that, I'm more inclined to think that this is a spot maybe seasonally and price wise where owning a little corn would make some sense to me. The bean is a cloudy picture to me because of what seems to be incredible pricing in the meal and the lack thereof in the beans. Maybe we just got to chop here for a little bit and get harvest a little further behind this. But I think the market is trying to base out. It just lacks that last initiative to get up and out of here.
Yeah, I agree with you. New contract highs overnight here in meal, but we can't get the soybean market back over 13. All right. Thanks for joining us. Brad Kooima with Kooima Kooima Varilek. That is Markets Now.